Good morning, traders. Welcome to Friday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news and see what's going on today so that we're not surprised by anything. So looking at the news for today, we've got a ton of medium news announcements and one large news announcement. So starting at the beginning, at 8:30 we have a bunch of medium news announcements, the core PCE price indexes, the employment cost index quarter over quarter. We also have the PCE price index year over year and month over month for December, the personal spending for December, and at 9:45, finally out of the 8:30 news, Chicago PMI, and 10 o'clock, Michigan consumer expectations and Michigan consumer sentiment, and then the big one at 10 o'clock, which is the pending home sales for December. The forecast for that is negative 0.1%. Then we go into the afternoon session. U.S. Baker Hughes oil rig counts and CFTC speculative net positions and all that stuff. The only other thing later in the afternoon evening session, at 1600 we have FOMC member Kaplan speaking, and then at 1725 FOMC member Daly speaking. So we do have some speakers this afternoon, but realistically the big news happens today at 10 o'clock. After that, there's not really a whole lot. So with that out of the way, then we can get into today's charts, looking at January 29 of 2021. Starting off on the NASDAQ, first up, we can see the NASDAQ did rotate pretty aggressively lower. The big concern with this rally higher and its failure is where it kind of failed off of. And we'll see that a bit more clearly on the S&P than the NASDAQ. But the fact that the market came back after attempting to rally up into the highs, failed all the way back down to the lows, tried to go up, made it about, let's say 65-70% of the way, and then failed all the way back down to the lows. That's not good, especially considering that it went back to the previous structural area of support resistance. That would suggest that this breakout above the highs was a failure, and now we're starting to see it attempt to rotate back down. Rising support is still in the way, and if we zoom out a little bit, the trend is obviously still up, but it's getting a bit more sideways. The next zone of interest, if the market does want to break down a bit further, is going to be in the 12,750s. Don't forget, right now we're sitting at NASDAQ 13,000. This is not an opportune place to be coming in on a Friday at the end of the week, and basically the last week of, well, yeah, it's the last Friday of the month in a brand new year. There's a lot of things happening here that could make this pretty awkward. And then over on the S&P, the one that looks a bit clearer, from the lows to the bottom of that big wick, you can see what took place here. We had this attempt that created this rising wedge support. That wedge support was broken down, held as resistance twice, actually 3 times, then rotated back lower. After it came back, though, it was treated as resistance again, and not just like a little bit, right? There was a full-on rejection all the way back down. So this is where sellers are trying to get this to rotate back lower. Again, possible suggestion that the bulls have gone too far and we need a corrective phase back down. Likely area for the S&P as far as psychological standpoint, because the NASDAQ has 13,000. S&P 3750, kind of hovering in the middle, but realistically, we don't have a whole lot from a psychological perspective in terms of big levels or anything like that to worry about. So it's going to be a bit more technically heavy on the S&P. Over on gold, which is, well, it tried climbing its way back up and then got obliterated, and now it's trying to climb its way back up again. It's trying to figure out what it wants to do. It looks very, very similar to the index markets in that they had that big rally up and then a big failure. The difference here, though, is that gold is starting to go back up. The other markets, the indexes, we're not seeing that. So gold is starting to show that maybe people are seeking shelter in gold while the indexes are falling off, and we're seeing a bit more of an increase in price. Looking at some of the previous resistance, we have that previous major swing low, but that's also a lot of other things, right? We've got the previous swing high, a bunch of lows inside of there. There's a big chunk of resistance here in the 1850s. 1855s. If the buyers can make it through it, then the top of the wedge at 65 isn't too far above that. So like we can see, we're in a range. We don't have a whole lot to work with right now. It's buy low, sell high, and unfortunately for gold at the moment, it's smack in the middle. There's not a whole lot we can do yet. Over on crude, as we continue that V spike that happened yesterday, crude oil had a big rally above into the 53.50s and then rolled all the way back down. With this failure move back down, again, this isn't a surprise. We know this 53, well, realistically 51 to 54 area is a mess. And so far, that's proven to be the case, unsurprisingly. So from the bigger picture, while the market's rotating down, we can also see that it may have held off of that wider channel top. It wasn't the best looking thing in the world. But now that it's trying to break down, this is where it's attempting to confirm if this channel still exists. We had a nice 1, 2, 3, 4, 5. Now we're looking for the 6th down here, which hasn't happened yet. Sellers will be looking for a continuation move, but from this perspective, we're in a range. And from a range, we got to buy low, sell high, and, well, crude's smack in the middle. There's not much we can do here. Shifting gears over to the euro with a price increase to the top of the wedge. It's still a wedge, rising lows, falling highs. It's not breaking out. Now, this is approaching it from a range perspective, and obviously in the much, much bigger picture, if we zoom out to like a daily, the euro is still very bullish. On the 15, though, well, realistically, it's not. It's been kind of grinding down for a while and seemingly putting in a bit of a range now. That could be a sign that the market is attempting to put in a reversal. Very infrequently will a market just straight up reverse. It usually takes a little bit of time to get that job done first. And usually that equates to the market going a bit sideways first and then deciding, does it want to go up or down? Well, we've got the sideways, and we have a massive higher low that was missed on the bottom right there. So with all of those different factors, kind of curious to see if we can break through the top of the wedge and keep it going back up towards at least resistance at the 1.218. That's going to be kind of the hot spot where all of that previous resistance came in. Switching gears onto the cryptocurrency side of things with Bitcoin. Bitcoin has a gargantuan rally all the way back up. We put in a low just underneath 30,000, actually not yesterday, the day before. They did go under 30,000 yesterday, barely. But we did dip underneath 30,000 and now attempting to rally higher. I think it's safe to say that that rally higher is, it's working. The big thing that stands out here is the potential of this turning into a area of rising resistance, which we just blew off the top of. That doesn't necessarily mean the buyers are done, but the buyers are going to want to see this lift back above because this could potentially cause some problems where the market is getting a bit overextended into the 37,000, 38,000 area. Now it's backing off. This is very typical for January, February. Remember, we've been talking about this for a while. The January, February effect going on crypto. Typically, February will bounce back, but it's a lower high. So we've already had a really big pullback to 30,000. I don't necessarily think the bull move is done, but it might be a little while till it continues back up if this failure really sticks. And then over on the euro with a very similar perspective, rising support, mostly kind of a range here, and the market rejecting an L5 off the top of the range at around 1400. This is a big zone of interest where, again, we've been talking about Ethereum making it up towards around targets of 16s to 1700s, which I still think is viable. But realistically, I wanted to see that in the middle of January. This is now a couple days away from the end of January. We've sort of run out of time. Typically in February, it dips and then rallies towards the middle part of February and then dips back down again, closing negative if January closes weak. So it's these last couple days here. We only have a few, but these last couple days are going to be very important to see how this month closes out. That said, remember, cryptocurrencies don't have market hours, so they'll keep trading on Saturday and Sunday, and they'll trade all the way through until we hit the brand new month. So very interested to see what they're going to do here. Alrighty, well that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic trading day today. I hope you've had a fantastic week so far, and enjoy the weekend, and we will see you all back on Monday. All right, have a good one. We'll talk to y'all later. Thanks.